Welcome everyone to the Kindle Report. It is Sunday night. It's a popcorn night, folks. There's a whole lot of stuff going on. Going to do a long-term outlook to a point. There's a couple of things that we're going to have to wait till tomorrow to get, but we'll go through a lot of details like we usually do at the beginning of a quarter. And can you believe it's April? It will be April 3rd already. I thought we just started. It's cranking along already. So anyway, hope everyone had a good weekend. Make sure you hit the subscribe button and hit the notification bell and hit the like. So let's go ahead and get into a lot. So on a Sunday, it's getting to be that it looks like a lot of things are happening on Sundays anymore. It seems to be the favorite day to try to surprise the market a little bit and see if you can get any type of jump out of the markets. That's the big deal right now. So OPEC announces cuts, and last time I looked here, take a look here real quick, crude oil up $4 now, was up a bit more, but that also plays into what I've been talking about with crude. So we'll go through all the details here shortly. But I have a full sheet, and I'll show you here. This is all my notes for tonight. I know there's a little glare on it, but there's a lot. So we'll stick with this oil theme because we have unemployment coming out. There's a lot to cover. There's a lot going to be going on this week. So this won't be a week for the weak-hearted anyway. And we're starting to see the August show up with some interesting reactions here. And I did see somebody mention Tesla. It looks like Tesla and Apple, they're getting very close to making a turn back to the downside here. So there's a lot of, this weekend was very distracted. I spent a lot of time yesterday working on another project, but it started pretty much all day just kind of studying things, going through what the probabilities were for everything and all that. So let's talk about this. Let's go to the OPEC situation, OPEC plus, I guess it's called now. Everything's got a plus on the end. And so what we're looking at here is there a demand issue? Is that what's going on? A couple of questions came up. I'll propose, and if you're watching this thing on a replay or now, if you'd comment, feel free to chime in on what you think. But I'm wondering just exactly what's going on. Why cut now? Is it true? I was on a Twitter Spaces earlier today, and there was Dr. Anas, who's a pretty smart guy, knows the oil market, but even he was stuck in a loop, in my opinion, on some of this stuff because we get into a lot of geopolitical thought. So it's not just straightforward. So I'm going to try to do my best. I'm not an oil analyst. I don't know. Don't have a deep understanding of this market. So I'll put that disclaimer out there. I do, what I was able to research though, is it does look like there's a couple things, and I'll probably tie together more of a geopolitical thing. So what have we been hearing about? And I'll cover the Dow tonight as well. But what have we been hearing a lot about? The BRICS, the new currency, everything's trying to see if they can challenge the US dollar, all of that. So let's go back to this oil situation. So why are they cutting this? It's obviously going to move oil prices higher to a point. And I heard rumors that, hey, Biden and the boys said they were going to buy back the SPR at 60. Well, it printed down there, they didn't show up, right? So now, okay, we're just going to cut. If they're not going to buy our oil, then we'll just cut the production. And if they want to buy it, we're going to make them pay up. Maybe that's one scenario, right? The other scenario is if there is a real consortium going on between the Middle East countries, the oil producers, the BRICS, Russia's in the mix. There's a whole lot of scenarios that I could spend probably an hour just talking about, but I'm going to try to unpack these as quickly as I can. And what I'm looking at here is really, it's a possibility that they're squeezing the oil and they're trying to put these payment systems together and try to eliminate the petrodollar, all of those type of things. It looks like there's a concerted effort of some sort. And what do we see on the planet? I'll just tie this the best I can, everything together. We see all the central banks, the Western central banks, doing the same thing. You can watch the news and they all have the same lead-in line or have the same tagline. Everything is being orchestrated as we see it right now. And maybe Elon Musk is right. Maybe this is just a simulation to see how we're going to respond to this. Maybe we are living in the Matrix. But the point is that I think there's a number of things that possibly are happening. I'm not saying they are. Certainly, I don't know that they are. I'm just some little man sitting out here in Arizona trying to figure markets out and what they're likely to do. And the realities are, is no one knows what the effects or what, if there is any kind of, and I'm not really calling it conspiracy or a concerted effort going on to try to move away from the U.S. dollar, to jack up oil prices. It seems kind of odd because we're about, not too far from coming into annual driving season. There's a whole lot of stuff that goes on. And there's something else. I picked up something out of this Twitter space. I think Dr. Inez made the comment. And I can't get rid of it. It keeps looping in my head. And one of the things he was talking about is when we finally see the failure of the green energy project. And he goes, when has the government ever had a success rate in trying to bring out a narrative like this? The answer is never. In 100 years, they've never done anything right. And it's not likely to play out. But I thought it was interesting because, I've watched maybe some of you own Teslas. I'm never buying an electric car, okay? I've watched about too many videos on Teslas blowing up into flames. And then you put water on lithium batteries, it's not a pretty sight. And so it's just like, I'm not sure that's our future. I'm not sure what's going to go on. Not that, fossil fuel cars or don't catch on fire. They do. I've seen that happen too. Plenty of those. But it just seems that they're just really putting out this narrative. But what ultimately is going to happen, every car is unlikely in the next 20 years to be electric. We're still going to need fuel. So what happens here? Let's say they jack the prices up on crude oil and they get them up. I don't know. Let's go $90. Okay, it's we're sitting here right now as we speak. I'm looking here at $80, but let's go 90, and all of a sudden maybe $100 again. Is China going to want to buy this fuel at that level? No, they'll probably just build. They're building a coal plant every week. They'll probably build 2 every week, and it's just not going to happen. They're not. All of this new energy is going to be very, very difficult to bring about, and and plus, yeah, I'm getting stuck here in a loop. I'm trying to find a way out, but the bottom line is what I see here is that there's probably going to be lots and lots of failures, and in the end, we're still going to need some type of hydro fuel, something that we're going to have to be working with. And the most likely winner is LNG, and nat gas is going to be the winner. If you go 3-5 years out, when all these programs that are out there everybody comes to realization that they don't work. Like windmills is like probably the stupidest thing ever, right? You're going to have graveyards of windmills at some stage. All they need to do is build a couple of nuclear reactors, and they can outproduce all that stuff. But we're going to see all this stuff happen, and ultimately, fossil fuels, whatever you want to call them, they are not going away, and we're going to see an increase in demand. And the problem is there are caps to what's going to be produced. So best I can tell you is oil prices aren't going down. I think there's something going on with the petrodollar. I think there's an effort by a number of countries to interrupt the last 100+ years. So we're going to see what happens here. And meanwhile, we'll get back on track here, and I'll get back into what I want to do. So I start off with that rant. I'm not sure. There's a number of things. There's so many trails I had to stop myself because we could do this for way too long. So let's get into what, let's look at some of the other things that we have to pay attention to this week. So much on the oil. And I'll talk more about the oil as we get up on the screen, just looking at the prices. So let's take a look at, let's go back on Friday and look at PCE. We saw, last Friday, we saw the squeeze I warned you folks about throughout the week. We started right at 4,000. We ended up at 4130 something. And the big squeeze on Friday, just a major bid. Somebody pointed out, I saw in the chat before I came on, that we did have an RTX sell signal. The RTX sell signals aren't as powerful as the STX buys, but I'll go through that in the technicals here in a few minutes. But so PCA came in at 0.3. Everything was as expected, a little better. It's starting, I think folks are starting to realize that maybe this isn't the crazy situation is that it was played out to be. And I still don't see, just for the record, I don't see inflation dropping a lot more, and I don't see interest rates dropping a lot more. I see more of a stable environment on those. If that's going to be the main driver, that's probably going to be the case. So that's pretty much it. Let's go through the expectations for this week's economic reports that are coming out. So ISM manufacturing on Monday, that's still in a contraction at 47.4. On Tuesday, we have factory orders. That's expected to be, I forgot to put the number down, but I believe it was slightly down. We have JOLTS coming out on Tuesday, which is the job openings. They've been at 10.82. Don't see that changing a lot. Maybe it'll contract down, and that's one of the factors the Fed is looking at, is trying to find out whether or not you're going to see, any big contraction. And that's maybe where the expectations of the job situation will start to moderate a little bit. Then we have on Wednesday, we got ADP expected 215, ISM non-manufacturing coming out. It's in expansion mode at 54.9. And then we have Thursday claims plus 200, continuing claims 1.689 million. Told you a million times, this is only concerning to me if we get back over 2 million. I don't see a big issue there. Maybe 1.75 will maybe identify a little trend to break out toward that 2 million, but it doesn't matter until we get there. Friday, and I'll be discussing this as we get closer through the week. Friday, we have unemployment expected to be 3.5, 245,000 new jobs. We got consumer credit coming out, expected to be around 15.08 billion. We'll see if we get any expansions. Like I said, I'll unpack those reports further as we get on. But this is not only with this oil situation, but we also have, like I said, we've got employment, and there's a couple other, these ISM reports are usually looked at pretty hard. So there's plenty for us to go through. Just a real quick recap. Last week, S&P up 3.5%, up 7% on the year. NASDAQ plus 3.4, up 16.8%. Long live the FANGs, right? They're just continuing. The Russell is up 3.9, so it actually outperformed a little bit last week and is now up 2.3% on the year. And all sectors were positive last week. And guess who the biggest winner was? It's interesting that this number comes out today, or the OPEC situation comes out. Energy up 6.2%, consumer non-cyclical up 5.6%, and real estate up 5.2%. And that's been something I've been talking about for a while, as far as the real estate on a retail side. Residential is really going to continue to improve here in spite of the higher interest rates. And I've been saying that for multiple months, maybe for a quarter and a half now. So got a lot to talk about. Let's go through the database, and then we'll get into the long-term outlook and get into the quarterly charts a whole bit on the S&P. All right, we'll start out here on the Are we getting an echo by chance here, folks? Just wondering. All right, I'm seeing something I shouldn't be seeing here on my monitor. So let me know if there's an echo. Okay. All right. Good. All right. It's really weird what I'm saying on my screen. Shouldn't be. All right. So onward. So here we are. Intermediate database ticked up 59.57% bullish. 2,380 buy signals for the opening in the morning on Monday. 146 sells. So big positive rotation. I mentioned that we probably move towards 62 to 68%. So as we come into this new quarter, we come into Q2, we should see a continuation of what we saw in Q1. And I've got some interesting thoughts that I'll share with you tonight when we go through the longer term aspects. Let's take a look at the daily. So daily ticked up to 38.99. We had 1,664 buys for the morning, and we had about 83 sells is all. So very concentrated on the buy side. So it's interesting from this standpoint of what's going on. The database in itself is continuing to expand, and I won't go through it tonight, but probably during the week sometime, we'll start to talk about the forward-looking aspects of the database. And with these new tranches, like I said, we get 2,400 more stocks. Right now, we're 6,000 stocks on the short term. On the intermediate, we have 9,380 symbols that are in trend mode. So this is a big deal. And these, especially in the intermediate, I'll just make a comment here. We don't get a lot of rotation there, meaning that it's typically once it gets traction, this will hold for a while. We're getting up to around that 62, 70, 72%, 72, 74% is where it typically will peak out. So if we get the peak, that does suggest that we are likely to see more action, positive action coming into Q3. But it looks to me there's some reasonable expectations, I'll show you on the technicals, that we're probably going to print out some kind of top, at least coming into sometime in Q3. So if we get into summer, we should see some of that happen. A little early to tell. I'll fine tune it as we go forward. But I did, like I said, I did quite a bit of work here on this. All right, let's get into the S&P. We'll start off with the short term, and we'll work our way from bottom up here. So this is the hourly graph we usually start at. And see the algos are turning south here. Someone mentioned I'll go through the RTX daily sell, and it usually means that we go 1 to 2 days sideways. It's not like a major sell signal. It really just is a consolidation, especially on the RTX. On the STX, when we get multiples in a row, that's a signal of something very positive, and that's one of the next release of our next suite of indicators. The STX buy signal will be one of them that gets released. There's several others that are being worked on right now. They're probably, just so you know, I've had a lot of questions. They're probably going to be at least 6 weeks. And you have to remember real quick that I am going to be I will be out of town, and there will be no broadcast as we come into mid-month. Actually, it'll be the 17th through the 21st. There will be no YouTube for Bob. So just mark your calendar there, 17 to 21. That will be a no-go on the channel. We'll try to get you folks set up the best I can. And so that's basically, we got 2 weeks until that point. So that is where we're heading right now. So we got this week and next week, and then that will be it. Yeah, and I think you'll see here as I go through the technicals, there's some interesting things setting up here right now too. Somebody always jokes, and I think I started this, that when I go out of town, the markets go down. And, I guess you could look at when I was in Europe last summer and see if that worked during that time. But here's the deal. Let's get back into the analysis here. The PPMs are about to cut through the second derivative here. We should see some further declines. In fact, you can see the forecast for the 10. We're trading right on it right now. The 10-period moving average is 41.26. We're trading last at 41.25.50. So we're starting to see it roll down. We may get down this, if we go a few hours out, we're probably looking at around 41.10, 41.05. We'll go through the market grid for the daily here in just a second. But everything looks like we should roll south. And as always, the favorite hour, the time on the bottom of the screen is actually Pacific time. So right around midnight, which is about an hour before London opens, is when it looks like we're going to maybe start to set up some sort of consolidation there, but it should potentially decline, and probably decline into this 21-period moving average that's here right now. Let's go ahead and let's go to the daily. And it's interesting because I've been talking about this angle of attack, and this is, you can see them in the forward forecast here, is that the 10 is still being forecasted. You see the PPMs going sideways, but they're positive. They're stabilizing around a 0.30, so they're going to stay in trend mode. And I will show you in a minute. I'm going to go over to TradeStation, and I'll show you we do have a long position that was generated out in the models around 4,008, I think was the number. We'll look at it here in a minute. But it looks like we're going to climb up this angle here. The algos are suggesting that we get a little minor top here, and maybe coming in into the market grid. Here's the RTX sell signal that we're looking at. So we should get 1 to 2 days sideways to down, and typically the down is around the S2 level. So let's go over there and take a look at that and just see if we can get this laid out. Let me get. So the buy signal I was telling you about here. Let me fix this box. Okay, so the buy signal I was telling you about came in on the 27th at 4,008 exactly. So that was good memory. we're breaking out here. We're seeing this thing start to move forward a little bit. We look at the market grid for the S&P for today. R1 4150. We've had a high of 4135. S1 4125. We've actually already printed S1. I would look for an S2 print. Don't think we get to S3. I think S2 holds. We probably stay above 4100, and maybe looking at R1, S2. So there's plenty of potential volatility here as we come into the range here. So we'll continue to look at that from that expectation level. So let's go back to the algos here. And let's go to the daily. This was somewhat interesting, I thought, and I wanted to hang on. I've got to get to this chart here. It disconnected on me, so hang on. All right, I got a 5-minute chart. We'll get the daily yet. Here we go. Okay. So this is hang on, folks. I'm having an issue here. There we go. We've got the back to the daily. Like I said, we're seeing some move towards this moderation. We should trade back into this potential back to around 40, 80, 40, 65. The market grid is likely to turn down. If we close below these levels tomorrow, let me give you a number. That's going to be 40.94 is the pivot. So if we traded through that, we'd see a move back towards 40.50 again. I'm not sure it's straight up. I think we get a little sideways movement here from that standpoint. All right, so let's go up the scale a little bit, and let's start to expand out into the longer term here. We've got some interesting patterns going on here. I'll expand this just so we can see this most current pattern here. I mentioned these Fibonacci targets up above at 40. It's 44.66. That's your big upside. On the downside, we're probably looking at worst case is 38.14. We already printed that. That was the print we got. We got to 38.39. We've already tested this. Now we're working the upper end. So this is the weekly. We look at the weekly market grid. That's going to be important this week. R1 is 41.77, so that would be a new high. That would be a follow through. On the upside, 42.22 is R2, so that's certainly a possibility. S1 is 40.97, so right around that 40.94, 40.97. That's going to be the key number to watch on the downside. We take that out, then you go to the next level down, which is that 40.50 extreme that I discussed just a minute ago. But the overall pattern, you see the moving averages are starting to being projected just to flatten out here. There's not any big screaming trend here, and this is the thing that I was talking about as we go through some of the patterns, is that I'm not super bullish here. The database is bullish, but that's about individual stocks. There's some pretty interesting things going on. When you get into individual stocks, obviously that's where the money's made. You can make good money trading indexes, but there's some really big opportunities that are starting to show up in the individual stocks. But the bottom line, the indexes look like they're going to stabilize. So the underlying stocks that are outside of, I've been talking about these secondary stocks for a while, which you would relate that to probably mid-cap, small-cap stocks. They really haven't performed very well. I believe maybe I'll bring up a chart here in a minute. I think that on a longer term basis, that we're going to see the small and mid cap, they're going to have to come alive. But I also will show you here in a minute that I think that this rally is going to be probably complete itself. And it's the same thing I've been talking about pretty much all year, is into Q3, probably as we start in Q3, 1 month, maybe maximum 2 months into Q3 is where this market tops out. And then I think we have some negative quarters as we get coming into the end of the year. So we had, if you recall, I'll show you in a minute, so I'll save that. So this is the weekly viewpoint. Let's go over to the monthly. And I am I'm just trying to get to something here real quick. Yeah, I thought I had all this set up. This is part of the reason why I was late getting live tonight. So I'm just going to, I just want to change the look back here on this, just so we can get some forecasts. Actually, that is not enough here. I'm going to go SPX so I can get it. We need more data. Okay, that's all I needed was more data here. So let's take a look at this. This is SPX cash. So the cap of this market is going to be right around the 21 period moving average here on a monthly basis. That puts us at 4202. And if we look at the market grid, now the market grid is not being reflected here because this is the cash. We don't have an opening. So I'm going to try to make sense of this for you. Okay, here's the monthly futures now. I don't have the projections here, but we can talk about it. You see the market grid's turned up for the monthly as we come into the month of April. And those forecasts right now, R1 4205, similar to R1 last month, but 4281 is R2. That would be just above that 21 period moving average. So that's certainly a probability. S1 is 4070 and S2 gets a little deep at 3994. So my expectation on a monthly basis would be probably S1, R2, which would put us at the 4070 level, which most likely we would print maybe that low this week or next. And then we'd see a rally. We'd have to penetrate through this 21-month moving average right now, which is right at 4192. We get above that, then we would see it move up potentially to those numbers I just discussed at 4280. That's going to be about the high, but you can see the market grid's turned up. The algos are suggesting more upside for a couple months, right into July. So this is kind of the target zone for when we should start to see a peak on the on this market from a monthly standpoint. So we're not getting any acceleration out of the PPMs. I'm going to flip back to the cash here just because I want to see you can see how the algos are and the moving averages are being projected. This 21 is going to be a heavy duty resistance. We're getting crossovers, but this puts us way out into August, September, and beyond out here. So most likely we're going to get sideways movement here and trading up into that potential into 4281. We've got Fibonacci target around 4400, just round numbers. So there's a lot to watch for, and I'll keep that in focus as we go through the month. Yeah, it's kind of a dragon head with a lot of noses. Yeah, but it looks like we will. Like I said, if we go back to the cash, this is, if we go back to the futures, you'll see that the market grid didn't turn up. So it looks like there's probably this quarter should stay positive. I'm going to stick to basically the hypothesis is that we're going to stay positive into maybe July or so, and we'll see what kind of numbers, and long ways off. I don't like to forecast a lot more than you can trade. It's fun to talk about, well, I think next year this is going to happen, but it's dartboard stuff. What you can do if you have a reasonable proficiency in technical and quant stuff is you can figure out 3 to 6 months. And if you can figure that out, I tell everybody, if you're a day trader, if you can figure out the next 2-3 bars ahead and you can anticipate that, you make a lot of money just with 3 bars. So in this case, we're looking at 3 months in this thing. So maybe we get some acceleration upside, but right now it doesn't look like it at the moment. So the numbers to watch for on a monthly are 42. We're going to round it off to 42.60 and 4400. And I'll fine tune these as we go through the quarter. But this pattern, you can see just the moving averages are not in what I call trend mode. And I've explained to folks back in the trading pit days, used to have a sign where you put up fingers, like if you notice the moving averages when they're in the trend mode, I'll put a cursor here on the page where this area, this is what the moving averages look like when they're going up, they're going down. This is trend mode. They spread out. This is the point. It's not the number 3, but it was like a buddy of mine used to always flash over, like, is it up or down, whatever, are we in trend mode? And so this is not trend mode. This is consolidation. This is still a lot of work to fix a whole lot of things that are wrong with this economy. And I know a lot of folks are, trying to start beating the drum on CRE, the commercial real estate. That's out there. There's some realities to that. I know it's a $25 trillion market, but I don't think it's going to affect the everyday guy. Especially the way a lot of this stuff is financed. There's going to be workarounds, extended loans. You're going to see some amazing magic in the commercial real estate world. These boys it's a giant club. It's definitely one that you're not in. And they are very adept at figuring out how to make everything work. And I know from, let's just say that in the multifamily level, it's basically like trading baseball cards when I was a kid. Like, hey, I got a Mickey Mantle, you want a Roger Maris kind of card. That's really dating me. But you're just trading the old cards. You're just trading one for another, and one guy's willing to pay up for the next one. They've just been rolling them. This game's been going on for 2 or 3 decades, and it probably will be perpetuated even more because it is the people that own these apartment buildings. They hang together real tight. They're going to figure out how to transact business and cash flow. People are still going to need to live and cash everything going there. But my point is that what we're looking at here is a whole lot of problems we go forward. I'm not ignoring them by any way, but the charts are telling us the same thing. We're going to go from here. I'm going to go to the quarterly, and we'll break this down, and you'll see this is interesting as well. As you'll see, the forecast, even on the quarterly, is that everything's flattening out, and there's no big uptrend. We're not in expansion mode where we're actually trading right now. This is not trading right now. This is the cash index, so there's no pricing, but we're looking at 4109. The 10-period moving average right now is 40.95. So we're right at this 10-period moving average. And what it's doing is it's losing momentum, and you can see it rolling over here. And you can see the underlying, which is the 21 quarter moving average. So all of a sudden, look at this. I moved my bar over, 3 months, and we're in 2024. We're in an election year. And so there's not any, what appears to be any big upside. I'm going to put on the ES just for a second here because I want to, so you can see that the market grid has turned up a little bit more. So all of a sudden, if you look at market grid on the quarterly, okay, this gets, R1 is 42.79, so that's around those numbers, 42.60, and look at R2, 44.38. So we could print R2 on a quarterly basis. That'd put us, at the end of this quarter, and we could be trading up around that range. What will be interesting, depending on how this quarter goes, is exactly how whether the market grid on a quarterly basis turns down. My expectation is that it will. I don't know that it will, but I'm expecting that to be the case. So I'm going back and forth between the futures and the cash here, folks. So back to cash, we can have the forecast. Forecast is showing just flattening out here. So we should stay above this 21 period moving average. And right now that's 30. That's a new low. It's plotting at the moment 30. Let me get the number, 35.20. It's basically, those are the October lows where that number is. And it is going up a bit. All of a sudden it's 36 and climbing this ladder, but it's not a real robust one. And like I said, my expectations are here that what we get is this sideways choppy range. I think this could carry us ultimately through the, I'm going to say 24 period. So I'm going to tell you that the money in the markets will be made in individual stocks. This will be the stock picker's heaven. And I would just tell you that utilizing the products like Wavetech and PortfolioXpert, those of you that are using it, those of you who aren't, you should consider, because that's going to be the key, is locating these stocks. Like I said, we've got thousands of buy orders coming out tomorrow. And on a weekly basis, what did just getting my notes back here for a second, is on a weekly basis, we had 2,380 of them. And the average holding period on these things are 180 to about 240 trading days. So that's a better part of a year. So there's going to be a lot of ideas that come out of here, and they're not going to be what I'm seeing here on the indexes. That's not where it's going to be. You're going to have to dig to find places to make money. And so far this year, hanging out with the FANGs, and I wonder why they haven't thrown Tesla into that acronym. But the bottom line is that there's a few stocks that have played out pretty good, and maybe they'll continue. But what I'm saying here is the indexes don't have a lot of VIG in them. That's an old floor term. They don't have a lot of upward momentum. They're upward momentum, but it's not accelerating. We're not in trend mode. We're in this massive consolidation range. So if this was a hypothesis that I talked about, even going back last year in 2022, that we'd probably hold above this 21 period moving average. And we did that. We actually traded almost to it this year. In the first, let's see here. Yeah, in the fourth quarter of last year, we traded down almost to it here. Let me get an exact number on the downside here. Is we got to 34.91 on the cash. That average was at, the number was 33.96. So we came pretty darn close to hitting that quarterly average, and we bounced off of that. That was my expectations because of that angle of attack, and because of the whole pattern that was setting up, that was likely going to happen. So let me just cover something else that came up for me earlier when I was doing analysis. If you notice, there's off the all-time high, there are 3 quarterly bars down, and each one made a lower low. Now we had, and if you recall then, I thought we would get some kind of bounce out of there. So we did get the low in October. We got fourth quarter low. Now we got some follow through. I think we get possibly one more month, but here's what could happen. And that's why I'm trying to set this up the best I can for you folks. So you're probably going to have to put another bag of popcorn in the microwave here. But the bottom line is what we're looking at here is that we're extending this rally, but what I'm expecting is in this new quarter here, this is the cash going back to the futures, going back to the futures here real quick. This new quarter that you see in red right now, what that is, we're probably going to print up a higher high than we just did the other day. We get to that 42 handle. Maybe we print the 44 handle, and then we get a reversal out of there. We get a rejection, and potentially by the end of this quarter, we close lower. And then as we come into Q3, maybe there's a retest or a consolidation. Then we get 3 bars down. We get basically end up with 2 greens, and then we start a 3-bar down again, which should set us back to this 21 quarter moving average, which right now is at 35.35, and that is rising about 100 points per quarter. So that's going to put us 36. So that would be basically end up being a retest of the October of 22 lows. That's what that's telling us now. So a little early to call that, but that is what this pattern is looking like. It's what I call a 3-2-3, and we could get into a 3-2-5, but with the configuration here, I don't see that happening. So yeah, so that's the long term. Everything that I just talked about will apply to the other indexes to the large part. Which one ends up winning and losing better than the other one, that's yet to be determined. But that's really the perspective. I worked on this earlier today, and that's the perspective I came up with from going from the monthly and then ultimately to this quarterly chart. So what I'm telling you is somewhere between now and the end of the quarter will be a peak value, and let's see what that. So we closed this last quarter. Let me see if I can just sink my putt here. Okay, 41.37. What I'm saying is we're going to rally probably into the 42 handle, maybe 44. But at the end of this quarter, we probably close under 4,100. That's what I'm saying right now. That's a long ways out. But that's what it looks like to me, that we end up getting a negative close here. And if that happens, then the fourth quarter will be most likely negative, and we'll retest some of these lower numbers. I'm way out on the tip of my skis right now. So I'm going to pull back a little bit, but that's my expectation. So we'll see how that all plays out. And I will update it every week as we go, except for the week of the 17th, which I will not be here. Okay, folks, let's go ahead and let's go to NASDAQ. All right, here's the NASDAQ daily. We're looking right now at the moving averages. Looks like they're starting to flatten out a little bit, but even if we go way out here, there's still, if we go out 4 or 5 days, there's still forecast to be in trend mode up. So once again, we should see the grid turn down. Probably tomorrow we are negative from where we finished on Friday. We should come down into this pattern a bit. And then you can see what's interesting is out of this pattern now, there's a however, is we got some new Fibonacci targets in the upside. 13.9, 14.400, I'm rounding numbers off, 14.700. That's what these 3 numbers here are. So it's interesting that we get that out of there. It could be one of these island, what I call an island projection, but the algos are suggesting flat. Going along this line just means this is your support line as we go through this. This is daily, so that's a fairly big number on a daily, especially if we hold some of these numbers as we get over here in the future just a little bit. But here's where I think the story is really being told, and that's what I was basically alluding to. You can see on the weekly, we've already, on the NASDAQ, we're cutting through the first derivative here on the algos, suggesting that we test this level, 12,006, let's see, yeah, 12,605. That's the right number. Let me look here. Yeah, so yeah, we would get down to 12,635. We'll call it 12,006. We'd come back and retrace here. However, there is some still upward projections. There's one at 13,313, 13,7 is still in here. We actually satisfied the 13,3, and now maybe we end up printing up here on, this is a weekly chart, we end up printing up here on the R2 is 13,6, R3 is 13,8. So that would put us up at this higher Fibonacci target and potentially move that up. The issue here, this is the weekly, we're still in bullish mode, that the indicators by crossing through PPM, the first derivative here, are suggesting a test of this 10-period moving average, which is down here at 12,600, we're going to call it, just rounding off numbers here. So that is an issue, and this has been, you think about it, this has been the leader of all the markets here, right? So what I want to just put out there is this, even though it looks like the NASDAQ could correct, the other markets could start to play catch up a little bit and fill the gaps where they may come down, but not as much. NASDAQ has more volatility. What I said was up 16.8% on the year. That could have a much higher volatility, which it always does anyway. So you could see more of a pullback here, but the weekly is right crossing through the first derivative, suggesting that the test of that let me get the right number here, suggesting a test of that 12,560 level is in play right now. And that could be this week or next week, but it definitely looks like the algos are really losing momentum here. And you can see even the forecast for the moving average here, I'll expand that a little bit. They're even showing that they're trying to roll over here, and there's a crossover being projected. This is 10 weeks out, so this is kind of fuzzy logic here. But the first couple here definitely looks like we could test this level here, which is at 12,006 level. So look for that from that standpoint. Like I said, there's still upper Fibonacci targets. We're still in trend mode. The PPM1 is at a plus 0.79. You need a 0.25 to be in trend mode. So very strong trend, but it looks like it's going to dissipate very, very quickly here. So I'll keep an eyeball on that one. Just in an attempt to try to get through tonight's stream, I told you it was going to be a long one. There's just so much to cover here. Going into the Russell, I'll go through weekly only on the Russell. It's interesting that we've traded up toward that 200-day moving average. I'm sorry, 200-week moving average that I've been talking about here. And we're looking at that right now is at 1840, and last price, this is the RTY. So we're looking last price 1809, so a little bit more. It looks like the algos are going to improve here. And this is my point when I'm talking about the small and mid cap. It definitely looks that way, maybe just for fun. I'll bring up like a ETF and MDY or something like that. But it looks like that's going to be where the market starts to gain back a little bit in spite of what appears to be maybe a pullback in the NASDAQ. Some of that money is going to roll out. If you think about it, the goals in the market, when you start to see when a rotation, they're looking, while they're selling something that they think is dear or expensive, they're looking for something to buy that's cheap. So this would be the more likely place for these things to show up, would be in these small cap stocks. So let's go ahead. I have not looked at this, but let's look at it together. Yeah, so MDY is similar in, this is an ETF for the mid cap stocks. Similar, got a lot of heavy overhead resistance here. Algos look like they're trying to improve. I said, I think it's interesting because there's a contrast here from the standpoint when you look at the two markets. We just looked at the NASDAQ weekly and everything was rolling over, starting to come down. We're looking at the Russell, everything's doing the opposite, all the indicators, and the PPMs are trying to turn up here. So they're in opposite directions. So if there's going to be a rotation in this market, this is what should happen. We should see a rotation in this next quarter as we come through it and towards some of these small cap stocks. So depending on what you're doing, just take a look at some of those stocks. If you're one of our subscribers on Wavetech, we just finished earlier today, we finished the new screens for the month of April. We have to process them. We sent them off to a partner that does all the processing of the sheets and brings in some of the other stats. Should be out, I'm hoping, by Tuesday, but this is going to be the place where you want to start to look at some of these small cap stocks. And one of our favorite is this Magic Value screen that we've used. There's probably 600 stocks in there, but there's some pretty easy ways if you're a Wavetech user or PortfolioXpert to kind of dig into those and find the good ones, find all the best of breed in there. But this is, like I said, small and mid, looks like they're completely opposite views of the NASDAQ, and even the S&P has got more of a downward projection or moderating projection from the standpoint of what's going on. All right, we'll go through the 10-year next. And like I said, after the 10-year, I'll go through a quick review of the dollar. So you can see here on the forecast for the treasuries, just sideways. It looks like the algos are going to start to move a little bit down here. There's going to be resistance here at 360. And I mentioned this the other day, we got up to, what was the highs? We got up to 361. I mentioned 365. 370 is tops here. I don't see us getting above that. We should see a good chance that we'll see the market grid turn down tomorrow, and I'll cover that tomorrow night. But it looks like interest rates are just going to go flat here for the most part, probably a consolidation, and this is pretty typical for that to happen. Let's take a quick look at the 2-year. It's a same basic configuration here, just blowing this up a little bit. So we're climbing along this 21 line. That value is right now at 405. Last trade on this is 410. So look for this to stay above this 21 and below this call it 425, 430 is going to be your peak values here. So we're going to see that. We should see the pressure of this 10 come into play in the next few days and start to put a cap on this market around 425. I don't see us getting much over there. And like I said, when these, we should see it turn down. This is a weekly chart we're looking at. All right, we'll cover the dollar just briefly here. It's interesting because if you made it through my rant early in the stream, what I was talking about here is that maybe there's a bit of a petrodollar attack going on here. It does look like there's some potential downside. The algos are suggesting that we're going to move down. I'm going to show you some. I'm going to reveal something. Just came out of, this is the weekly chart out of this new week, is there are some downward projections coming in here from a Fibonacci standpoint, kind of scary ones, but we'll talk about a couple numbers here real quick. Is we're looking at right now that low target 191.86.83. That's these red dots down here. I would also argue that this is a weekly chart, that the 98 level is going, 98 and a quarter level is going to be pretty robust, sitting here at that should be a pretty good support level. But here's a but. You can see all the moving averages are starting to turn down. You can see the algos are turning down. So it looks like if not this week, in the next 2 weeks, we should start to see some downward pressure and probably challenge some of these lower levels. After we printed, we got that little, what I call an echo bounce, where we went back, where the market went back around the 105 level, and we got right to that pivot. You see these red dots here. Let me blow this up so you can see this a bit better. These red dots here, this is what it's called. This comes out of the Fibonacci projection tool, but it's called a pivot when there's one that continues on. So that was your top end of your level there, and that, I'm just trying to get this number out of here. Just trying to find that print. Yeah, that was 107.24, and we got up to 105.88. But that was your cap on the market. We also had the moving averages right there. The 21 was right there, and it's still negative, even though PPM1 was positive. You can see that was, and I remember talking about this, probably been a month ago since I've covered this market, but this 21 was downward slope was going to be the key resistance. So as you look at that last month, we had the 21 at, kind of hard to get all these numbers on the right page here, but yeah, so you're looking at the 21, the high was right here at 105, and the moving average is 104.60. So we traded just below it. You can see the markets followed that line all the way down. So now we have resistance right at the resistance, are right at 103.75, and then 103.90, and then 106.45 is the big resistance. But this has formed a downward channel here, so it looks like we're probably going to head down and see if we can print to these lower levels here, which would be, the key number is going to be down at 100. So as I pointed out on the, we're probably looking at maybe a 98 handle to be printed here. So it does look like there's some potential downside here, and it looks like the trend is in place, and there's plenty of resistance points above the market. So that probably will spell out something good. We'll go through crude oil next, and then we'll hit on gold. All right, so the gold is traded up. I didn't think we'd get here, but we did. It is up to the 21 period moving average. 83.12 is that number. The high 83.69. So we printed just above here. Looks like to me that we're going to stay in a positive mode, and we're probably going to continue to move. I remember we were down here. We had some of I was expecting to trade back into these averages, which was the 7 up to around the, I'm just trying to get these numbers, around the 75, 77 level. Well, we've exceeded this with the news, and we're already trading toward the end, lower end of the range. Let me bring up the daily so you can see a little bit of the pattern that's unfolding here. So we gapped higher. It's trying to come back and fill the gap. Even though we gapped higher, it looks like, to me, all of this stuff will catch up. We should see the moving averages come in here. If we can stay up, we'll see some acceleration on the upside. But for the moment, my expectation would be we stay under the 200-day, which right now is at 83. Let me get this number, 83.33. And we should stay below that number and move our way back into these moving averages. So I don't see a runaway market here by any means. All right, next we'll do gold. This is daily. We're still seeing that rounding effect on moving averages. The algos are still suggesting that we're going to come down into these averages. We've got some Fibonacci targets in here to take a look at. We've got 1963, 44, 32. I've been talking about those numbers. We've really just been in a consolidation. We've spiked up and come right back into the mid-range here. 1960, around that level. The fib target one is 63.90. That's been in this pattern that's where we've been bouncing out of. Now what's happening is the 10-period moving average is starting to roll, and it's also suggesting some days out in the future we're going to see a crossover to the downside of the 10 and the 21, which would suggest that we come back further into this pattern, at least down to 1930, 1925. And, possibly the stable interest rates. Dow doesn't look like it's going to collapse. It's probably going to stay drift lower. That doesn't seem to be a good impetus there. Let's take a look at the weekly and see if we pick up anything here. If we get this big expansion of volatility, weekly is actually suggesting there's more upside here, at least on short term. We should see we'll just say where the rubber is going to meet the road is going to be. If we trade down to this moving average value here at around 1905, that would be a bargain to pick up anything. If we look at some of the market grid numbers here, this is on a weekly basis. S1 is 66. There's that number again, around that 60 handle. And then we got 43 and 20 on the market grid for the weekly. On the upside, there's 2006 and 2021. So the weekly's got a much better looking profile. Even the algos are much better. So short term seems a little bit noisy. We probably hold into this 1960 level, and then possibility if we can get through last week's high, then we probably end up challenging some of these numbers on the upside. So daily looks a little confusing. Sometimes when you look at the short-term charts, you'll see some contradictory number. I think these weekly numbers are good, but not to say that the daily could be right, and all they're really doing is telling us that we're going to print down into this S1, R2 level, S1, S2. All right, we'll stay covering Bitcoin, be the final market tonight. Appreciate everybody's patience. I know I got started a little, but we're about an hour and 15 in here right now, so hour 12 into it. So thanks again. Hopefully had enough popcorn for tonight. But we're looking here at Bitcoin still in that sideways mode. We got that RTX sell signal going back here on the 13th and basically been sideways for two. It looks like the algos are still suggesting we're going to test this 10-period moving average. And that number right now is at 24,921. I've been talking about 25.5. We'll call it 25.5 to 25 even. And if we were to get to that level, then you're looking at probably moving toward maybe 22, 23,000 on this. But it does look like a consolidation. This is the weekly graph we're looking at. So algos are all kind of peaking out here, just suggesting we're coming back into these moving averages. Let's take a quick look at the short term. We did get some new Fibonacci targets to the downside tonight, 26.3, 25.240, 25.576. So right into that 40-period moving average is the downside. Algos are a little negative, not totally. PPM1 is still at a 0.09, so it's basically flattened out. The key number to watch it on a pivot area, PPM2 is still at 0.62, but it's suggesting the next couple of days it's going to lose a lot of its momentum. So there's more of a probability of it getting penetrated here down to 25, 250, 25 even should be. That's going to be the key point. We get below that, we could end up at the 40, which would suggest that we would get down to the 25,000. So everything's telling us 25.5, 25,000 even from that standpoint. Okay, folks, that'll do it for tonight. Thank you for hanging out and going through all that. I think that we're going to have an interesting week. So, stay sharp. Watch a lot of these values I talked about. Try to get us updated here for the beginning of the new quarter. We're probably going to spend a lot on this week going through those kind of numbers. I don't see that theme going away anytime soon. And the action over the next couple of days are going to tell us everything we need. Like I said, we did get RTXL on, I believe, on the NASDAQ as well as on the S&P. So we do have sideways to down. Looking around, the magic number looks to be 40.97 to watch for on the S&P futures. All right, folks, that'll do it. Just looking at yeah, you must fell asleep, Carly. It was a long crude presentation. Anyway, the replay will be up here in a few minutes, so you can spin back and look at that. Yeah, it's kind of interesting to look at some of your chat here, folks. Anyway, appreciate all your comments, everything that you guys do. Hit the subscribe button, hit the like button, notification bell, comment, do all that stuff. Still trying to break the YouTube algo. They don't like me, so that's okay. There's a very small chance that I'm stuck here at 32,800 for a year. Anyway, have a great day trading tomorrow. Thanks for hanging out with me tonight, and I'll see you same time tomorrow night.